Hello guys, what's happening with Bitcoin? Let's see, let's start from here. What do we have in this chart? We have the classic Bitcoin candle chart and this green line that represents the PMI, USA PMI Institute for Supply Management. As you can notice, maybe you already know, but as you can notice, we are flat on the PMI starting from January 2023, and now the level is around 48.21. Above 50 is strength, below 50 is weakness. Why I'm showing you this? Because we have some kind of strong correlation between the Bitcoin price and the PMI chart. As you can see here on the green line, starting from April 2020, we had a strong push upward of the PMI chart. At the same, almost the same time, we had a reaction of the Bitcoin price. We are speaking about a bull market here, guys. Same happened before. Let's see, before, let's go to 2015, January 16, okay, push up of the PMI and Bitcoin followed with an amazing bull market. So this flat behavior of the PMI could be the reason why we didn't see the blow off top on the Bitcoin chart. Now let's move to another chart to see another correlation. Here we have the same Bitcoin candlestick chart and the WILCL, the total asset of the Federal Reserve, basically their balance sheet. It includes US Treasury, MBS, bank loans, and emergency program. Why I'm showing you this chart, this correlation? Because as you can see, starting from March 2022, the Fed was reducing the balance sheet, doing quantitative tightening, as you can see here. It's another factor that for sure doesn't help Bitcoin price to go up. Bitcoin need liquidity. If we have less liquidity in the market, Bitcoin obviously struggle. But I want to show you what's happened in the past because we have an interesting situation. As you can see here, we are in August 2019. We had a quantitative tightening, then the beginning of the quantitative easing, but Bitcoin chart didn't react immediately, okay? We had a big correction, and then we started with the second part of the bull market. So I'm thinking about something could happen now. To be honest, I have to say that the Fed is already injecting liquidity through the repo facility, which are short-term loans to the bank. We do not see this directly in the WILCL chart, but the effect is real, guys. Let's move to the technical analysis now. And here we are. We are on the BTC USD monthly chart. As you can see, I have Fibonacci levels starting from the top to the bottom that I used to define more or less, obviously, the supports. But let's speak about another things that is for sure more important. Here we have an inverse head, a giant inverse head and shoulder, right? This red line that you can see here is the neckline of this inverse head and shoulder. As an anchor point to draw it, I use the body of the candles, okay guys? It's important because I don't want a noise in my chart, so it has to be clean. As you can see, we are very close. Okay, this is a level, guys, that I don't want to break to see a continuation for this bull market. If we break down this line, the first support is at $71.253 thousand. This is the first support that we have. As you can notice here in this part, this lateralization, this consolidation that started in March 24 and ended in October 24. I use the fixed range volume profile to try to understand where is the strongest point inside this part, this lateralization. The white line is the point of control. It is at $77,200,000. Okay, guys, we are very close. This level is very close to the 50 period EMA. So if we have the strength to break down this trend line, this ascending trend line, the neckline of the inverse head and shoulder, we can easily, like a strategy chart did, get inside this consolidation zone and find support around 65 to 67K. Then you see this white line. This white line starts from the top, excluding the shadow, the top of the previous bull market. We are at $61.322 thousand, okay? Why I'm drawing this kind of line? because we had a similarity with the past. Okay, if you check here, this was the bull market ended in January 2018. I took the body of the candles because, as you can notice, at the end of the past bear market, and speaking about the 2021 bear market, the price stopped the reverse very close to the previous stop. This is another confirmation that if we lose this support, this trend line, ascending trend line, we can stop around this price between 61 and 65k, repeating the same behavior that we had on the Bitcoin price in 2022. If you think about what is going to happen in 2026, we have Jerome Powell leaving the Federal Reserve, Trump's guys getting in, and for sure we'll see dovish tone from Federal Reserve staff. Probably a lot of liquidity getting in back in the market, guys. So I'm thinking about a mini bear market. You know what I mean? If going down we reach the 73, 72k levels, will go down about 51%. At this level, in my opinion, could be the end of the bear market, or if you want, could be the beginning of the second part of this bull market, targeting at least 130k, 150, and then 189k. Step by step, guys. I don't want to say that will happen, but we have a lot of good signs that make me think that it's going to happen. Obviously, if we have enough strength to stay above this level, this golden pocket, take a look at the riskier zone. And speaking about what is that, 98k as a resistance, 100k psychological level, and the zone between 102, 103, and 104. Okay, this is the zone where we can see a stronger rejection. The first one, the strongest one now, is at 98k. Bull case, starting from here, I want to see 108k broken and start to work as a support. Okay, but we'll speak about that in the next video, guys. Hey guys, anyway, I'm not an authorized financial advisor, so look at my analysis like a personal opinion, my personal idea of what can happen in the market. Okay, guys, for today it's everything. Remember to subscribe. Sorry for my English, not good. I'm trying to get better, but I'm good at trading. I mean, I've been trading for 11 years, so I know what I'm speaking about. Have a nice day. See you the next one. Bye, guys.